information and then act on it. So we've already got a few questions from you folks. And the flow for today's program is that DJ takes 10 minutes to, so Dhanpal is DJ in short. So DJ takes 10 minutes to kind of quickly set the context, talk about his thoughts and what they're doing for their portfolio companies. And then I would like all of you to start posting your questions on the web chat, and I'll pick up the interesting ones and the ones which are kind of the trending themes. So hang back, sit tight. Over to you, DJ.
Thank you, Naveen, and a very good afternoon to all of you. Clearly, as we are now in our 17th, 18th day of lockdown, and we're all figuring out how to live our lives in this new, I would say normal that we are currently experiencing. I just hope that each one of you have had the opportunity to discover one new thing about yourselves and one new thing about your family members. But having said that, I thought first what I'll do is maybe give you my quick impressions of COVID and what COVID means to me, what I think is happening as a result of COVID, and then maybe go on to a little bit what I believe on a broader, from an India perspective, what could be the likely implications, and then clearly also talk about how we are thinking about this unprecedented situation from our own portfolio perspective. So I'll maybe take all of 5, 7, maybe 8 minutes to do that, and then really get into the thick of things in terms of answering your questions. So first and foremost, I think this is a medical crisis, and which is fast becoming a humanitarian crisis, which has been never seen by this world over the last 100 years. And I say this because in my 25, 30 years of a work experience, we've seen a fair number of crises. We've seen the demonetization, before that the global financial crisis. We've seen the 9/11 issue in the US and that impact on the economy related to that. We've seen the dot-com crisis. We've seen, even going as far back, the balance of payments crisis India had in 1991, et cetera, et cetera. So we've as a country, at least in my working experience, I've seen that every exogenous shock, as I call this is a shock, right? Both to, more human beings and economies, countries, governments, people at large. There's one thing which clearly I've seen, which kind of time and again bears out, is that the human being is an extremely adaptive, resilient, and finally, I would say an optimistic animal. And I think it's our core instincts to basically fight, to basically survive, and to come out. I think it's those very instincts which hopefully should help us as we navigate, as I told you earlier, what is unprecedented for each and every one of us. Since we've never dealt with it, no one really knows. Governments don't know how to deal with it. The scientists, the doctors, the larger community which is keeping us safe right now, trying to keep us safe right now, don't know how to deal with it, but they're doing everything they can in the best way they can. When I compare it to all of these, I think if you look at possibly the global financial crisis, which all of us in recent history remember quite well, I think this is a crisis, I believe, many times more in terms of magnitude than what even the GFC was. I was talking to some experts, and their statement was the GFC is a walk in the park compared to what we are facing today. So I don't think anyone else should underestimate the likely damage this is going to cost to human lives, to the way we live, and finally to what it does to the economy at large, and to each of us as individuals, businessmen, entrepreneurs, professionals, etc. The other thing is clearly that most crises have a kind of if you look at from an economic perspective, different types. So they call it a V-shaped recovery, U-shaped recovery, L-shaped recovery, etc. And it's too early in the days today to figure out what's going to happen. For all practical purposes, I think where we are in India is at a fairly early stage yet. And what we saw in China, what we've seen in other geographies, US, etc., I think India will, over the next 3 at least, more probably, I think the next 6 months, will continue to see the impact of the virus spread across the country as a whole. And therefore, I think the coordinated action between the central government, the various state governments, local corporations, etc., will continue to play itself out depending on the extremity with which the virus spreads, the severity with which it kind of hits various pockets and parts of this country, and therefore what action various machineries of the state and the center are going to take to basically contain it and kind of, I would say, blunt the impact that will have on all of us. So I think we're yet at that stage, and for us, therefore, it's very difficult today, right? I mean, most, as we all know, business plans and business models, even in normal times, are very difficult to try and estimate and try and basically predict and project. In these kind of time, business models and business plans are out, completely out. Literally, you've got to throw it in the garbage. And the only thing you can really look at is, in my view, market signals, right? And if you look at what's happening to the equity markets, you look at what's happening to the bond markets, what's happening to the commodity markets, oil has gone from 60 to 30, and I'll talk about that impact. And you finally look at what's happening to pretty much every asset class. Because other than maybe something like a gold, etc., right, which has always been a safe haven asset, we've seen massive amount of wealth loss. And that wealth loss, one, just in terms of, the extent of the loss, the time it will take to basically recover that, if at all one can recover it, and many, many asset classes, I think for a long period of time, recovery will be difficult. I think there's a lot of criticism and a lot of, I would say also at the same time, different views coming out on what's the right way to handle this. I don't think there is any right or wrong answer, but at least from whatever little anecdotal information we're seeing, India seems to have taken steps which seem extreme, but it clearly seems that given that there are 3 or 4 phases to tackle this virus: isolation, testing, treatment, and then finally the rehabilitation. I think we basically are lacking in most other parts, and the only way to really try and mitigate and blunt this impact of the virus is really isolation. So what we are going to go through as a country, and I think the humanitarian issue really therefore comes to the fore, is I believe governments around the world and even in India will continue to take rearguard action to basically save lives and to reduce the blunt of this virus. And therefore the implications on the economy at large, I think, are going to be far severe. And we have to be possibly planning for something which is far worse than we've ever seen in our lives. So what we've done, as a firm and as a team is really basically, there's a whole acting part and then there is a planning part. The acting part is really about, first and foremost, no business is going to survive without cash. So, first and foremost, we are figuring out everything we can to basically liquidate and make cash available in the system in whatever way we can. 2 is literally on a no regrets basis, take all kinds of action when it comes to, basically reducing costs. And I call this no regrets, and we can talk about it. And I'm sure a lot of people have questions on that. But one has to take that action because you've got to prepare for something which is far worse than you guys have ever seen. Okay. And I'm not trying to save, then we'll figure out what to do next day. So right now we all have to get into our survival instincts and only think about that first. Because there is, like I said, very little one can do from a planning perspective today because we don't know how long this will last. I mean, every day you see WhatsApp groups and all kinds of messages coming on how long the lockdown will last. And I think a few days ago there was a lot of anticipation that lockdown will be released. Now suddenly there's lots of talk around, and we've seen this in every other country, right? That as the virus continues to spread, people will take action. So you have to be prepared in a scenario for the next 3 to 6 months at least. And I would think if you can even plan out as much as 9 months or 12 months of cash flow, nothing like it. But most people and most businesses don't plan for that kind of cash in their businesses. And therefore, I'm saying the first rearguard action everyone needs to do is, and if you haven't done that, you should start doing that. I think other than that, the cost part I talked about, customers are going to be, again, another cohort where you will see revenues drop anywhere from, I would say 10 to 100%, right? We've seen some of our portfolio companies actually grow 30% in this period. And these are companies which are providing daily necessities. But at the same time, we've seen other companies where revenue is going to go to zero because those companies basically, the business model is, right, if public places are shut, what are you going to do? If hotels are shut, what are they going to do? There's no revenue. So there are lots of parts of the economy which have got impacted very differently. And each one of you, as you look at what your situation is, you've got to very quickly evaluate that. Is revenue going to go to zero? Is it going to be zero for a long period of time or be much lower for a long period of time? And again, it comes back to basically how much cash do you need? There is a burn which each business will go through, and you got to cut all costs to make sure can you last at least 6 months, ideally 12 months, right? In a doomsday scenario. So you have to do that stress testing of your business, and you've got to get to that point. Once we do all of that, then stabilize, obviously there is the whole issue of, how do we deal with our employees, and each one again have to take their own decisions. I believe don't do anything futuristic, but clearly as far as possible, we try to see, can we save jobs? Can we make sure that people are, if there are sacrifices to be made, is the sacrifices more equitable in nature, where you're trying to spread the impact across the larger cohort rather than individuals? And everyone basically has to take some sort of sacrifice. And various businesses I've talked to have done it differently. Some people have cut salaries across the board. Some people have only, stopped bonuses and increments. Some people have basically, cut salaries based on different levels of, the people obviously at the lower end of the food chain get a lower impact. People who are more senior, starting with promoters, management, etc., taking much bigger cuts, all of that. In all of this, it's also very important to, make sure, and I think one thing which I've seen universally, is most people have actually transitioned to working from home reasonably well. Obviously, there are businesses which just can't work from home, where you have to be at the client site, say construction services, for example. You can't build anything if you're not at site. But there are many other businesses which have actually adapted to transitioning from home well. And actually, that's leading to, I believe, lots of new business models which will emerge as we see, this crisis behind us in the next 6-12 months. So, and then finally, I think, use this opportunity then to really think about what you guys are doing today as a business and rework your business plan. Having said all of this, I would say from an India perspective, through every crisis, when global, especially markets like the US have been in a recession, one silver lining I can say that India has generally tended to do better than most economies coming out of a recession. Commodity prices globally will be low, and as an economy, India is highly dependent on imports, and therefore, if oil stays at a lower than what is the normal, and we think that will remain the case, many other commodities which are used as input materials to build our nation continue to remain low. Inflation as a result of that remains low. We've generally seen India do better, and therefore I'm quite hopeful that once this crisis, and this crisis will be behind us at some point in time, we will be able to pick up the threads from that, look at what we've kind of got with us, and then go on to rebuilding the future. So I'll take a pause now, and maybe we'll straight get into Q&A on that basis.
Yeah, thanks, DJ. Just to start off with, DJ, on the last note that you ended with, what is your best guess estimate on when do you see things coming back to normal, and how do you see various industries kickstarting post that? I'm sure this is going to be a very gradual thing, but if you can just give us an estimate of how you think this is going to pan out, that will be helpful for all the entrepreneurs.
So look, I think to plan for anything before September of any kind of normalcy being achieved, I think would be extremely brave. And I would think to a certain extent, I would even use the term reckless to assume that. For any, if you've looked at the China, which has been possibly one of the most disciplined in the way they've enforced lockdowns and the way they've now started seeing their economy come back. And I don't think any other country in the world can replicate the discipline of what a Chinese model can do.
Correct.
In that environment, and therefore we have to assume less efficient than the Chinese model. It's taken them, I think, if I remember correctly, 73 days from lockdown to basically releasing lockdown and starting to come back to normalcy. Where, from whatever anecdotal feedback I get, manufacturing is about 85% back, and businesses have now started to take orders. Malls have been opened up, public places have been opened up. And, there's interesting anecdotal information of how people have gone and done revenge shopping in some of the Wuhan, for example, when the malls, there's this place just outside Wuhan, which is like the Bista village outside London. And there was so much revenge shopping, people had to shut down the mall and kind of quarantine, or not quarantine, but basically create strict discipline of people coming in. And because a lot of us are sitting, and I've been talking to friends and colleagues, and they all are waiting with a shopping list, if I might say,
So,
of things they haven't bought in, and they've realized that they have missing. Everything from gym equipment to all kinds of, foods, all kinds of entertainment stuff, all kinds of things you can think about it. So you'll see some of that bounce back, come back. Like I told you, literally I'm going, and once in 3 days I go out and basically do some, provision shopping. And it's amazing the amount of snack food which is being consumed. When I talk to these retailers, they say, boss, everything is just flying off the shelves because people are sitting at home with nothing better to do. And so board games, snack foods, all kinds of things are basically being bought crazily. Yeah. So I would say don't plan for anything less than, I would say, up to September. At least you can expect all kinds of restrictions. Beyond that, one is hopeful that if we've missed, and we've basically, I'm hearing theories around how BCG vaccines in Indians are likely to play a pretty important role in people's immune systems, and therefore should be able to, somehow help us to withstand this virus better than many others. So I don't know, but plan for at least September. I would say in all probability, like I said, plan at least till next March.
so do you see, DJ, that post the lockdown and post things coming back to normal, there could also be a sudden resurgence of business uptake where there is a massive buying spree and people wanting to get a grab on things? Do you think India is going to see that, and our entrepreneurs going to benefit from that?
I think very, very episodical. I don't think it's going to be a full-fledged kind of a swing back.
Mm-hmm.
My view is I'm yet not clear as to whether this is going to be a V-shaped recovery or it's going to be a slightly longer U-shaped recovery.
Okay.
My sense is going to be the latter.
Mm-hmm.
V-shaped recoveries typically, I think in many ways, 3 weeks of lockdown, like in the last 25 years, I haven't ever stayed away from work for 3 weeks. I mean, it's not like I'm not working right now from home, but being at home for 3 weeks, I think is the first time ever I've done in my life.
Okay.
I would say since I started working, right? And therefore, I know it in many ways. I've changed the way I've, started managing my day. Now, whether it means do I just bounce back and doing everything what I was doing in the past, maybe unlikely. I'll travel less. I'll maybe eat less when I go out. Maybe I will definitely avoid a lot of public places, at least for the foreseeable future. I will definitely not, I think people are going to be hurt pretty bad. And I think for most people, a lot of discretionary spend will be on the back burner. Your standard, annual or twice a year holidays are clearly out for the foreseeable future. That means everything you do around that, the travel, the hospitality, the entertainment, the dining out, everything you do along with that. So a lot of those economies are going to hit really badly. So all of them will have to think very differently, right, about how they manage the business for the next 12 months.
So DJ, you guys, own the master license for Burger King in India. So what's the plans over there? What are the talks currently going on?
So I don't want to talk about specific companies because, everyone is going through their own, I would say currently, like I said, challenge of how to deal with it. But if you look at, the restaurant business, right now, one of the key drivers for most restaurant businesses as to how do you basically digitize and you go into a, I would say off location mode, right? Basically increasing deliveries, etc. So every QSR that I have to talk to and spoken to in the last, the interesting thing is, in some way, someone told me that we've been planning kind of for a pre-COVID situation for the last 2 years. It's not like the economy over the last 2 years has been kind of roaring and, bouncing around well. We've seen significant stress develop over the last 2 years in the economy. We've seen slowing growth rates. Businesses are, as it is, kind of seeing, slowdown in revenue growth, slowdown in, business, challenges on their own front. And a lot of businesses, interestingly, are already started preparing and planning and changing their strategy, their business model, all to deal with a fairly sluggish economic environment. I mean, if you look at the financial services industry, in fact, things like ILFS and, other companies such as DFHL, I mean, they've been in like, one CEO in Half just told me, I've been in COVID mode for the last 18 months, 21 months, right? So they were already doing so much, and then this hitting them on top of that, I think in some ways there was a semi-preparedness. Nothing, I believe, no one is prepared for the extent of impact COVID is going to cause everyone, but there was some sort of a semi-preparedness that was there. And therefore, coming out of it, I think you will see, first of all, definitely a higher mortality rate. You will see a lot of businesses which were, as it is, struggling in the last 2 years, I think will find it extremely difficult to survive. And many businesses, I think, should just take a very hard look at what they're doing today, and whether it's even worth hoping that things will kind of, improve. And like I said, if you can't really see 12 months ahead of you, you've got to take a very hard look at what you're doing today and whether you really, and I've seen this, right? Earlier, through crises, businesses have hibernated. They've gone into I would almost call it cold storage, shuttered everything, brought it down to a zero, kept the absolute core alive with whatever little cash they have, and saying, look, when things come back, we'll go and hire teams again. We will start building our franchise again. We will go and reach out to customers who we were servicing in the past. And then we'll figure out how to basically come back in a 2.0 version. And I would think everyone should, if they're on the fringe today, should start looking at that very, very seriously. This is not going to be, you can't plan and prepare for a quick V-shaped recovery. That's all I can say.
Yeah, that's a pretty good input, DJ. The kind of questions that are coming about, I'm going to start picking a few and asking you. And I think one important question that all my, fellow entrepreneurs today would want to know is, what do you see the investment decisions over the next 3 days from an investor's perspective?
Yeah. So look over there. I think the one key question is, okay, if I do, and most people arrive, I'm running out of cash. How do I raise capital, right? Can I? Absolutely. I don't think you can leave any stone unturned if you believe in your business and if you believe that coming out of this crisis, you actually have, and that's the planning part, right? What is this crisis going to do to you, for your customers, for your other stakeholders, for your business model? And you've got to question every part of that and then come out to basically say, okay, this is what likely is going to happen to my business. And therefore, based on that scenario, can I paint a new normal picture for my business? And what is the capital I need for that? And I would say, go for it and just basically start making. One good part about what's happened is most people are at home and most people really don't have an excuse to say, I don't have time. Okay. Yes. A lot of people are dealing with their current challenges and their situation. And, there is a lot of that going on from home, but there is, I believe, overall an increased accessibility, which previously may not have been possible. And I think, therefore, to that extent, there is an opportunity to reach out and even kind of make those connections and have conversations with people otherwise may not have been possible earlier. So that's one. I would say definitely, I would encourage you all to do that. From that perspective, I think, yes, figure out every way you can, tap into all your relationships, your contacts, everyone. I know a lot of my, when I speak to where customers are stepping in, customers are giving advances, right? Because they want the business to survive. And they're saying, okay, what can we do to work with you for helping you tide over? Because if you are an important part of any ecosystem, you will see people step out and seeing what can we do to make sure that your ecosystem members survive so that they can ride that worst period and then come back and figure out how to then basically work together to create value for ourselves.
Yeah, so a lot of our participants have commented, things like IoT, AI, digital transformation, these are the ones which are key, I think, at this current situation. And every company today, I think, will be wanting a BCP, DR plan henceforth. So I think every investor, I think, will want a slide henceforth on what's your business plan if things come to zero. I think that will become a part of our DNA going forward. The other question, I think, which a lot of people are asking is on the manufacturing sector and like what you said, the construction sector. What do they do in the current time?
So frankly speaking, there's not much to be done. Okay, because you are in lockdown, you can't provide any services, and clearly, like I said, it's right now about balance sheet survival, right? So manufacturing, in my view, again, depending on what type of manufacturing you do, like I said, essential services has come back. We are seeing actually growth in some of those businesses within our own portfolio. But you've got to see whether you're part of a supply chain, and in that supply chain, how important a part you play and how critical a part you are for someone to basically choose you over maybe another supplier or not, right? So I think having conversations with the customers is an extremely important part of this process. Customers themselves would have no clue when they will be basically going out and, say auto sector as a whole. There's a huge, auto is one of the largest industries in India, and there are lots and lots of companies which depend on the auto sector. Like I said, it was as it is a sector which was struggling. As a result of that, a lot of people had already started doing a lot of value engineering within their businesses. But I would think that that sector will take time. It's not going to be a quick turnaround over there. Construction services, again, I think you will see a lot of mortality in the real estate industry. You will, as a result of that, see a shrinkage in the overall construction activity. Again, therefore, you've got to see which are your customers who are likely to survive, which are your customers who are likely not to. And therefore, your exposure to those customers, how do you improve? How do you reduce? It's a tough question, a tough decision you have to take. But those are the things that you would want to, right? There's a lot of construction equipment at site, which is a slang item. What happens, right? Maybe out of this, there is an opportunity which comes up that the better players actually can take market share. And that's what typically happens out of every crisis. The ones who survive the crisis have the ability to take market share from the ones who will not, for sure. And you will, I can guarantee you, in each and every industry, will see mortality. Question is, are you that person who remains and survives, or you're not? That's what you've got to ask yourself. And you've got to plan for that.
And I think the advice that you gave earlier is there's no harm and no embarrassment in going into cold storage and coming back to fight another day. So let that also be the message.
That may be possibly the best thing for certain people, right? I've talked to, construction industries, again, very demand supply driven, right? And if you specifically look at that industry, a lot of the input materials, in my view, are going to generally come down in terms of cost, right? So that means cost of delivery is going to come down. That means the cost to a customer for a delivered product is going to come down. Now, if one can pass on all of that, that by itself will trigger demand.
Absolutely.
You will see some demand having evaporated forever, but new pockets of demand will come up because of that.
And a crazy thought, DJ, is that this is the best time for a lot of local governments to fix the roads, get their...
So one more, I think, trend you will see, I think, which is likely to happen, is that you will see a lot of supply chains, which had somehow become global supply chains, starting to get more localized.
Okay.
And also global supply chains, you will start seeing, China was a country which was pretty much a dominant supplier of most commodities around the world, or most manufactured products around the world. I'm actually seeing interesting anecdotal information, and this is all anecdotal, of companies in India benefiting from that, right? Where they've suddenly seen a surge in orders from their customers on saying basically, and they're actually running out of capacity, and so their big challenge is, how do I invest? What happens if 6 months later, everything goes back to normal and business just goes back to China? So they have a different type of a problem they're solving, is a sudden surge in demand where their capacity is pretty much, obviously, apart from the lockdown, assuming the lockdown kind of gradually comes out in the next 3-6 months, will this demand trend remain or not is what they're questioning. And should they start planning to potentially invest, right? So one of the things they're working with customers is basically tying up long-term contracts, right? Saying, give me 3-month visibility, 3-year visibility, enter into those contracts, give me the guarantee that you're going to be there now that you switched production to me, and then help me basically take that decision to invest in those assets so that I can at least be your service provider for the next 3 years.
Yeah, and I see Indian pharma industry going to surge post-COVID in a big way. I think US is going to mitigate their all China, at least in the generics part of it. We're going to have a lot of Indian pharma companies supplying generics to the world post this. So from that question, what it naturally cascades into, DJ, is the real estate sector next. And from real estate, I think the next question is on retail. What happens to retail stores, and how do you negotiate with your landlords and stuff. So I think if you can talk about the real estate sector and then what happens to retail, that would be a perfect segue.
So retail is one of the tougher hit sectors. Clearly, if you ask me from a heat map perspective, it's one of those sectors which is in the red. And I think you will see retail, and different retail is very broad sector. Like I said, your grocery stores, your supermarkets, I believe the bounce back over that will be pretty much quicker than if you think about discretionary consumption, right? And that's where I think a lot of those models will accelerate their go digital plan.
Correct.
The offline to online strategy, I think, will get accentuated over there. So if anyone is kind of in that sector is basically exposed, I think they'll be all be thinking about how do I increase my retail online footprint? How do I basically become more accessible through an online strategy? And how do I, if I haven't been doing that, how do I generate the investment dollars to basically go and put money to work over there? But overall, I continue to believe that's a sector which will come back depending on what part of the economy you're working on. Like pharmacies, for example, right? We've seen a massive boost in e-pharmacies. At the same time, pharma retailers also have done pretty well, right? So it's not like, but overall, everyone's got impacted. So I would say, again, if you are lower down in the order of priority in a consumer's wallet of spending, and you think about it yourself, put yourself in the consumer's position, would you be spending on something? And if not, intuitively, I would believe that's what the sector which you would not be spending on is going to get hit there. There's obviously some, I would say, between urban and rural retail, there is again slight differences where we've seen urban get impacted more than rural. Rural as it is was lesser in terms of reach and access, etc. And therefore, I think the relative impact will be maybe lesser. We'll only know with time whether it's going to be the same or more. But at this point in time, that seems to be the case.
And real estate, DJ, what's your take on that?
It's been a 5-year bear market. I believe this is just extending the bear market. So you will see, I'm seeing a lot of people saying, okay, equity markets have basically gone to bits. Maybe we should invest in real estate. I believe every asset class is deflated. So it's again, your preference of where you feel comfortable investing as an investor. But I think every asset class is going to deflate. And India will see, even though you've seen lower interest rates, don't believe that will transmit in terms of lower cost of credit to borrowers. I think the risk premiums have increased. So most borrowers should actually prepare for a period. They will actually be paying same or possibly even higher costs of borrowing for a period of time. Unless, I would say like some very high quality, very resilient, strong balance sheet businesses who clearly will see an impact of lower interest rates into their cost of financing.
So that is a good one for the next questions that are coming up, which is basically on the banking industry and fintechs. I think this already was stressed before COVID. A lot of startups and entrepreneurs want to ask, are banks going to come to their rescue in terms of lending and giving them loans and stuff? And I've also got a couple of fintech questions asking how are they impacted, especially talking about lending taking a hit now. Your thoughts on that, DJ?
So my view is in the short term, next 3 months disbursements you should just basically assume disbursements are going to be zero.
Okay.
The forecast for the industry for this year is likely to be a 0 to 5% credit growth. And the forecast for the industry is that credit costs for the entire credit industry is going to grow.
Okay.
No one knows to what extent the credit costs will grow because we don't know the extent of this crisis. Is it 3 months, 6 months or longer, right? But these are pretty much consensus views which are coming from across the lending industry. Having said that, I think there'll be very sharp divides between what I call the haves and the have-nots. So the haves will come out of this much stronger. People who have strong balance sheets, strong capital adequacy, reasonably good, underwriting and reasonably good, I would say, secured lending as compared to unsecured lending, et cetera, right? So there will be a much sharper divide. And therefore the ones who are, and like again say, I see a fairly high mortality rate in this industry.
Okay.
Having said that, this is the one area where I believe the government policy action is going to determine how deep this crisis hits that industry, or how much the policy action is going to try and mitigate some of the implications and the hits that this industry is going to take. And that so far, I think, and again, what we've heard the RBI governor state is that he's extremely focused on financial stability, because credit is the fundamental engine for any economic activity. And so they can't allow the credit engine to stop. It has definitely stalled, and they would want to see it restart and continue to start, basically. But I would say it's a long journey back. It's 6 to 9 months at least before you start seeing any sort of normalcy starting to return in the credit industry. What it means for fintech and fintech players is, like I again said, plan for the next 12 months, assuming the worst. Okay, if you've got exposure, if you have customers to manage, that's in my view critical. How do you manage the customers as they navigate this unprecedented situation to basically service their loans? How do you manage your lenders, right? Because lenders are themselves going to their own stress testing and their own balance sheets to understand how asset quality is going to impact each of their businesses, and therefore what should they do as a business. So I would say this is the time literally to over communicate to all your stakeholders. You have to be in touch. And I think that's a good part about a digital economy, that you guys are already using digital means, so you didn't have to necessarily start offering all these digital mechanisms to reach out and manage and all that stuff. And that's the good part about the business model. The bad part, like I said, from a regulatory environment and economic perspective, everything is in flux. So only as new regulatory measures are taken, policy initiatives or measures are taken, will you really know what the outcome for each of your businesses is likely to be. But in the meantime, I would say very strongly engage with your customers and your other stakeholders, like your lenders and other shareholders, investors, etc.
Okay. The next question, I think, DJ, is again something which you can answer. And this is, if you can take a stand on behalf of the entire private equity industry in India. The question is,
Tough.
how is it going to be for the next 12 months? Are you guys capitalized enough? Even if you have the capital, are you willing to spend? Where? That's the question which one of our entrepreneurs has asked.
So first and foremost, I think just the core instinct of any investor is to be an optimist. Okay, because that's why we invest, right? We create an optimistic view of the future. We believe in that there is a future which is better than what the current is, and therefore we invest capital. Having said that, I think there are 2 or 3 realities here. One is that every investor who's been an investor in India for a while is, seeing various forms of stress in their portfolio. So first and foremost, the instinct of every investor will be to see what do we protect, what we already have.
Got it.
So therefore, working with the portfolio companies to prepare them for this situation, and then to basically take it forward in terms of working with them to plan and then build those businesses. Second is, I think a lot of the capital will be for supporting the existing portfolio businesses, right? Because some businesses may need capital, some businesses will be fine, and therefore that assessment will be, every investor will be doing that. What do I need to do to work with my portfolio? Is there anything more that I need to do and plan for in case there's need for capital and cash? The third is that I think out of every crisis, you typically see asset valuations deflate, and therefore I would say for a lot of investors would be to say, okay, fine, there's been a sudden reset. And I think from a venture capital industry, particularly the last 1.5 years has been particularly difficult, right? We've seen a lot of stress build and a lot of business models getting challenged. And like I said, a lot of people had been already planning for a new business kind of I would say 2.0, maybe this is now 3.0. So therefore, from that perspective, I think investors who have dry powder, who have figured out what to do with their portfolio, then will start looking at, but I would not believe that things will happen in a hurry. It's not like suddenly you will start seeing massive amount of deal activity, because like I said, if you don't understand the macro, it's very difficult to figure out the micro.
Got it.
So that next 3 to 6 months, in my view, will be a lot of conversations, a lot of evaluation. People who have dry capital or dry powder, as they call it in our industry lingo, will be doing a lot of that and using this next 3 to 6 months to figure out which are the ones that they would want to basically engage and potentially then diligence, and maybe 9 months down the road is when we'll start see deal activities really pick up there. And so a lot of what you will see in terms of deal activity over the next 3 to 6 months will be largely around portfolio recapitalization, which will be happening.
Okay, thanks, DJ. And the next sector that people have asked you questions on is the B2B. What do you see is the outlook for them, even from a SaaS, OEM, suppliers, industrial products? If you want to kind of, I think the cloud will survive. Yeah.
Look, I don't think there's a generic response to that, because each one has to kind of come out with their own, like I said, stress testing of their own business, and to see whether or not the problem they were solving, is that problem an immediate problem for their B2B customers that needs to be solved? Is it becoming more important today than what it was earlier? Or is it something that people will put on the back burner saying, maybe it's good to have, but in this time, I'd rather focus on other priority 1, 2, 3 things. So I think that's the first thing you should, literally take a very hard look at what you're doing, and then first decide that. Where are you in the order of priorities for your customer in this new environment? And if you're likely to be lower down or likely to be maybe higher up, that's your opportunity versus challenge, what you will see for your own business. And that also then gives you the reason there to go out and say, okay, maybe this is the right time to raise capital, right? When the market is hurting, you need to basically build up your business development activities and then really do an outreach. I mean, you've seen a classic example of what we're using today, Zoom, right? That company's market cap has gone up 10x in the last 2 months, 10x in 2 months, including some obscure Chinese company, which was called Zoom on, I think it was a NASDAQ, right? Which most people didn't know that Zoom was a different Zoom from this Zoom that we're using, right? So there are all kinds of stupid things happening, but I think that's what you're seeing, right? Very clearly, you've got to look at what your business is, and therefore whether or not that business is something that will be a priority or not for most of your customers in the next 6 to 12 months.
And the next question, DJ, I think has come about is the agri sector and farmers in India. What do you see happening over there? Farming.
So again, I think I believe the longer term trajectory for farming and the disintermediation of farming is something which is here to stay. I don't believe that thesis gets impacted. You're also seeing huge amount of policy action to support the people at the base or the bottom of the pyramid. And I believe the government has a view and will continue to retain that view to continue to do whatever it can to protect the masses. And a lot of it, as you know, is to do with the rural community. So I would continue to believe that agri-tech is a very interesting place to play and continue to, if you've got a pretty resilient business model, you believe that there is a need for what you're doing within the agri sector today, I would say that continues to play itself well for the long term.
Okay. And what happens to all the consulting, HR services, accounting services, all the folks which are basically an ancillary to a business?
So there's an interesting saying, right? Which is basically the 80-20 rule, right? In most organizations, you suddenly realize that 20% of your organization is productive, the rest 80% are there and they exist. I think that it's made it sharper. Most organizations have started to realize what really they need and what they don't need. And in some ways, I think the outsource industry might actually be a beneficiary of this. What it means is potentially job losses, which is not good for the economy, but it may mean an improvement in the gig economy. A lot of people figuring out that if they can provide, and then I kind of sharply divided in 2 types of services. Services where you're offering certain skills, or services where you're offering solutions. Okay, and both of those will have a very different, I would say, build out, which will take place in this economy. I think a lot of skill-based solutions will move to the gig economy, where even service providers will start to variabilize their cost structures, okay, where they will start working and figuring out how to leverage the number of hours someone works and how to pay for that, and then translate it into the number of hours they deliver for those skills to their customers. And on the other side, solutions that they're offering, right? SaaS solutions or whatever it is that they're offering. How do you basically help variabilize the cost to customers and a lot of businesses, and therefore bring down their fixed overheads? I think a lot of these business models, as we go and come out of this crisis, will start getting tested even more and more. So like I said, guys, lock and load, survive for the next 12 months. And I think a lot of interesting things will come out of that.
Thank you. And so DJ, now I think you've done a quick round of all sectors and you've answered most of them. The next question is, I think more on the action side, as you said, operational issues. And one of the things that, early stage startup founders want to know is, how does the balance sheet look now? Or what are the items that they should start looking at closely and deleting them? Or how do you think a current balance sheet versus post-COVID balance sheet should look? What are the items
So I think first and foremost, basically try and convert everything to cash.
Okay.
Because cash is the one thing which is going to allow you to first survive your cash burn or your lower revenues, clearly. Two is allow you to pivot your business model, because most business models will have to pivot.
Correct.
They will not be able to do business as usual. They'll have to change the way they do business, and you will need to make some investments for that. And then coming out of that, hopefully, if things come back, you will basically then be able to build a trajectory. So whatever is in your balance sheet, please look at everything possible, right? From both on receivables, other current assets, inventory, fixed asset, everything, look at it and see whatever is possible. How much of it can you really convert into cash? From your payables perspective, from your credit, from your borrowers, lenders, how can you get as much stretching out of those things to kind of reduce the immediate cash burn for you, right? Salaries, your P&L is the next thing that you look at, right? Your overheads, salaries, everything. So I would say startups, as it is, were always stretched for dollars, and they were always living literally from month to month, quarter to quarter. And like I said, even more so, you've got to look at it from that perspective. At the same time, if you have strong belief in a business, you may want to use this time to, if you've built your plan for the future, and like I said, you've planned that in the next 6 months, 9 months, nothing is going to happen, but you will come out of it stronger. You raise the resources required for that.
Okay. And
this is the best time to do that. There's no other time. I mean, like I said, everyone's working from home here. So there is a way to reach people now, which was not that easy, or not as easy earlier.
Yeah, we've got a very good idea of something called a spiritual tourism, which somebody has posted about, which you can start right away and reach everywhere.
So I think fitness industry, mental health industry, a lot of that is going to move online. So literally, I have been using Orange Theory Fitness for the last 2 weeks daily. I go on 30 minutes. I've been basically, a friend of mine who lives in Miami does this yoga classes, and she does it for physically handicapped people, basically people who are physically challenged. And she does it for cancer patients who are basically going through cancer cure, right? So now suddenly, I think a lot of these, so if you have a certain skill, right, just monetize that skill. I think a lot of people want to do that, right? They want to listen to people. I think the number of, and all of it is available free right now. So it's, I would believe, a freemium model, which will come in very quickly, where you will get a free, and which is what, taste of what is happening. And then you will find it's so easy, because we've all now become slowly creatures of habit, right? Of the way we are buying things, the way we are consuming things online. And all of this, I think, are great models there for a lot of startups to look at. How do they basically, deliver that? I mean, I see gym companies tying up with a Decathlon and saying, okay, you need this kit. I'm going to supply this kit to you. It's available for you at 500 rupees or whatever it is, right? So it's a kind of, model that you'll build. A lot of these things will happen. So I'm pretty excited about what the future holds. But everyone has to take a very hard look at how do you survive to take advantage of that future.
Yeah, I think demonetization was Digital India 1.0, and this is going to be 2.0. One key learning for us all is I think we are all going to be digital by the end of COVID-19 and that. The other question that somebody has asked on operational issue is they have a
And
lot of.
that digital India, just, it is going to cut across age groups. It is going to cut across communities or all SEC classes, everyone, right? Because everyone is learning
True.
to become digitally literate in these 3 weeks. From my 86-year-old father, who never knew how to use WhatsApp, never knew how to read a newspaper on his phone or his laptop, right? To listening to consuming music. He used to use the Saregama, that caravan stuff, and now he just listens to it on his phone. I mean, it's amazing. I would say that changing in behavior that you're going to see across the board. So you will suddenly start seeing new customer groups emerge where you never thought were your customer group is. So start thinking on all those lines.
I think this is the time to innovate basically. And that's a big learning for all the entrepreneurs who are there. One other operational issue that a startup has asked is a lot of payments have to come from corporates, and they're enforcing their force majeure clauses on these people. How do they kind of negotiate, come out of this? What do they do?
Yeah. So look, I think this is at least from most people I talk to, a force majeure event. Now the question is, each contract will have its own terms, and each party to the contract will decide whether or not it applies to them or not. But like I said, when you're talking about converting everything to cash and then second saving costs, you've got to use every means. And the time to do it is now, not once the lockdown is released and then things are starting to go back to normal, right? If you have stress, you need to take action now. You need to intimate counterparties now. If you intend to delay payments to creditors, if you intend to cut salaries, if you intend to basically hold off on any other types of payments, make first that move of intimating people and letting them know. Look at your contracts, look at whatever is possible in the contracts to determine whether or not is something. Obviously, there is a long-term relationship with a lot of these, I would say, ecosystem partners. And you've got to figure out what's the right way to engage with each of them, right? And that's something I believe through all of this, everyone has to take pain, and everyone will take some less, some more pain, but they all understand what the reality of the situation is. That's a good part. It's not you individually are suffering, the whole world at large is suffering.
And DJ, what happens to consumer goods, and especially if they want to do e-commerce on that?
In terms of switching to an e-commerce model, or what?
No, what happens to the fridges and the TVs and the electronics and all of them? And a lot of these people, I mean, the question from the startup is they were in the e-commerce side of it. Now, in the current lockdown, all this is being shut. It's only essential goods which are going on.
So I think the timeline and the trajectory of the recovery is one can't predict today. So both these things are anyone's guesses. And like I said, just be prepared for a slower, longer recovery period. But look, these are all, India is at a fairly early stage for penetration of everything. And these are all, I look at it from a more macro perspective, a per capita income driven consumption, right? Cities are a much higher per capita than many other rural parts of India. And they have been the first drivers in terms of the demand. As rural India has got more and more prosperous, which I think will take longer, you have to just build in that longer period of time for all these segments and categories to basically grow. And like I said, not everyone will survive. You will see, even within this cohort, a lot of players not survive, which then creates gaps in the market for existing players to basically, occupy that vacated market. And that's where, again, I have to tell you, you've got to each look at where you guys are playing and see what's likely to get vacated and where you can, come in and occupy that space.
So then, what do you think should companies do now, DJ, especially on their advertising and marketing budgets? On the one hand, the debate is that there's enough of people sitting at home and looking at stuff, while on the other hand, everybody's saying, save on cash. How do you kind of advise on that?
Yeah, I'm actually looking at the chat because there are lots of questions coming on the chat.
Yeah.
And maybe let me pull out some of those questions.
So I've been asking you from the chat actually. So.
Oh, you have? Okay. Some impact on facilities management business. I think there's massive opportunity in facilities management because everyone is going to take a lot of precautionary action. It's like someone told me about the Japanese economy, right? If you look at the Japanese population, and I've been to Japan, Tokyo several times, the mask business in Japan is a perennial business because everyone uses masks. Whenever there is a cold or a flu in the household members will basically wear a mask before they move out of the house. Every public place will have sanitizers available to them. So you're going to see a lot of behavior changing and therefore a lot of new product demand which will come out of that. So I don't think to that effect, facilities management, robotics and facilities management, great idea. Okay, because there is human risk, but you've got to think about cost of service, right? Is the cost of that delivering that service through a robot going to be lower and as efficient as a human being can? Can you reduce that? Clearly, I think robotics clearly has a place to play. But I think that in India, given everything around, you may see a hybrid model of both humans and robots working together to essentially deliver services on facilities management. China gaining from negative global perception, India gaining from negative global perception of China. I think it's like I said, we've already seen some of that because, the US and China were in a trade war. They were basically trying to gain position from each other. So we'd already seen Southeast Asians, I would say, particularly benefit a lot from that. India actually did not benefit too much. But like I've told you, anecdotally, I'm hearing Indian businesses benefiting from this kind of lockdown which took place in China. But I'm not sure whether that's sustainable because as China comes back and starts delivering, maybe this benefit is not sustainable. So we'll only have to see. It's going to be very industry specific. And again, what Indian businesses and how well they're positioned to take advantage.
No, in a funny way, DJ, they also have the first mover advantage of getting COVID and coming out of it. So as they come out of it and start their industry, the world around will still be kind of going through their cycles. So they'll again become suppliers to the world and most of the things. So I see it that way.
Yes, but I always believe if you look at it from a micro perspective, Indians had the opportunity and yet continue to have the opportunity to compete on many product categories, especially when engineering skills are involved with other players. So I think, we've seen it in life sciences. We continue to see it in certain types of engineering products. And I think there's a broader opportunity which is possible. And you'll start seeing, like I said, a lot of localization of supply chain. So we may see more and more manufacturing happening in India for local markets.
Okay. And I think, DJ, there's one question on how are you going to base your business decision given revenues and cash flows at this moment are nil?
Sorry, how are we going to base what?
Your investing decisions right now, given that,
I don't think, like I said, I think most investors will be basically either if they're already looking at investing in businesses which they've been evaluating for a while and not done, there will be obviously tough conversations around what happens in the next 6 to 12 months. And therefore, there's a need to look at the terms around the transaction. Anything new which comes out, I think it will be at least 3 to 6 months before people really start taking decisions. So a lot of the work will be more in terms of building conviction around things people like and really pulling the trigger only once there's more visibility around how 12 months will look.
Okay. And what happens to, I think there's going to be a pretty good surge in medical equipments. And there was one earlier question about, telemedicine to rural. What's your take on that?
So I think from a medical equipment perspective, again, I think a lot of the engineering aspects of Indian, ecosystem come in. I think we've done a phenomenal job in the auto industry. We've actually woefully lagged behind on the medical devices side. And I think it's time that India start building competencies and capabilities around that. We've seen that in many high-end sectors like stents, for example, cardiac stents, etc. India has actually made very good progress. And I do believe that there are many other areas where we could potentially, using our superior engineering capabilities, start building these products in India and offering them at much better price points, especially because I think regulatory caps on medical procedures in India will remain, and global companies will always be challenged in terms of pricing them from a local market perspective. So if you can create the right business model around that and offer high quality products at competitive pricing, at regulatory pricing, there's clearly a opportunity and a market for that. When it comes to telemedicine and all, I think again, we've seen signs of that. Again, I think you've seen to a certain extent, in markets today, people starting to use that for consultation, etc. But my view is that the behavior has not necessarily changed so dramatically, where naturally people will kind of switch and just start doing that and not really have a more physical kind of a diagnosis process.
Okay. The next question I think also comes to you is on invoice discounting business. As RBI is currently putting its moratorium right now, what's your view on that as a lending product going forward?
I personally believe it's an extremely complicated and a fragile business strategy, because it doesn't really fit in any one type of loan category. And various people have been trying to use this in different methods in different ways. It's a very difficult business model to build, in my view.
Okay.
And can be done maybe in a very local environment, I would say in a proprietary manner, but not something I believe, even using technology and all, can be scaled and can be sustainable for a very long period of time.
Okay.
It's quite difficult to do that. Someone asked about school publishing. I think it's a very, very tough, because yes, you're right. Jan to March is when the whole distribution system gets filled up and sales happen between March and June. Given that, I think there'll be a lot of restriction on schools opening up and people maybe necessarily having to study from home. I think this is one sector which will go through a fair amount of stress before you start seeing some normalcy return.
But don't you also think on the flip side, we will start seeing a lot of online education and online tutorial and online classrooms taking?
So you have to be digital ready. You've got to have your content completely in digital form. So yes, if you can do all of that, if you've done all of that, that's a positive, right? Very clearly. But I think you will see the interesting thing is that the education system possibly is one of the, I would say, industries which is possibly impacted and which is likely to change forever. How you deliver and consume education. In many ways, I think most colleges, schools, universities will have to think about what are they really doing over here and what are they charging for.
Yeah, we have one other question saying somebody wants to start off a business in simplified mathematics and scientific components repository. What's your
no clue. I have no clue what that is.
Okay.
But look, it's obviously something, you've tried to find a niche which maybe, at least as a layperson, I can't understand. And, stress test your problem that you're looking to solve over there with them. That might give you some sense.
True. So there's a question on what's happening with Ascent Health during the lockdown. Would you like to take that question?
Again, don't like to talk about specific portfolio companies, but we've seen massive, overall it's, I would say every retail industry got impacted, and pharma is no different from any other retail industry. But to the extent that it's been an essential services, I think deliveries are permissible, as well as people going, and basically pharmacies are allowed to remain open to dispense medicine there. So it's less impacted than many other like QSRs or cinema businesses, movie theaters, those kind of things. Those have all got very severely affected comparatively.
Okay, and again, this is one of the ones that I think you're asked, and sometimes it keeps you awake during the night. What are those investment opportunities that you have passed along and now regret, DJ?
What have we passed along? Regrets.
No.
I never.
No. What have been those past investment opportunities that you have passed on, and now they've turned out to be great, and you regret them, having not invested in them?
So the reality is that anything one, let's say there are two buckets or maybe three buckets, right? What we passed on, which we don't like, or two, which we, whether it's a sector view or whether it's a business view. Two is basically stuff which we have passed on because we've just not found the price to be right. Right. I would say that those maybe the latter might be slightly more business which we may want to look at again. But you have to realize that all businesses will have to rewrite what their business model is going forward. Nothing has remained the same. It's not like everything is just going to go back to normal and everyone will behave in exactly the same way. Markets, companies, competitors, the ecosystem is going to behave in exactly the same way. It will change. It will change, some for the good, like I said, for the bad. And therefore, you only now have to start thinking about what is likely to change and how is that going to impact the business going forward. And that, in my view, therefore means that it's almost resetting everything and looking at everything afresh. So even if something that I'd really liked in the past is not necessarily I love it today because, I liked it in the past. But the reality is things will come back. It's not going to remain the same forever. You will consume, say, for example, renewable energy is a big area which we are now investing in and have been, building strategies around that. You're going to continue to consume energy. If anything, I think the world will move even more towards, because everyone's now experiencing what clean air and no air pollution and all looks like, right? And so you've got yourself fast forwarded in an area where there are no diesel and therefore carbon emitting vehicles on the road. And that experience is something people now have actually enjoyed for a few weeks. And I'm hoping people will switch to electric transportation, people switch to cleaner forms of, consuming energy. And that should give a massive uplift to that industry. So if you ask me where I'm bullish, I think that's one of the areas I'm really positive and bullish about from a climate perspective as well as from a economy perspective.
There's an interesting question, DJ, which a lot of people have been talking in the past few days. What's your opinion on this? This was a time for the online grocers and the delivery folks to actually come up and live up, but they've failed completely, and still our local kirana stores and vegetable vendors are the ones who have been helping us. What do you think is the problem here?
I think the failure is largely to do with last mile delivery. You saw the supply chain being choked for 1 week.
Okay.
Then you saw massive migration, because you think about it, right? Just in a city where we live, right, in Mumbai, you've got Dharavi supplying most of the delivery staff, which basically are, hired by all these tech companies to go and deliver, right? Now you've got Dharavi under lockdown. You've got a lot of parts of the city under lockdown. There are certain slums in the Worli area which are completely locked down, etc. So how do you deliver, right? So you've seen serious challenges even for them. But I think as things come back to normal, they'll be possibly, be in a very, very strong wicket, because the brand has got established. Consumers have got used to using the brand. People who, like I said, first-time people, right? Consumers who never use those platforms possibly have now for the first time ever started using those platforms, even to inquire or maybe place an order, even if the order is not got fulfilled, etc. And therefore, you've suddenly seen a lot of those positives. I think these businesses have experienced it. Now, how it comes out of this, I think each company, like I said, has to survive to then take advantage of.
And DJ, what do you see are the major differences between the 2008 financial meltdown and 2020 pandemic? What's going to be the impact?
I think 2008 was a Wall Street, or I would say Dalal Street issue, right? There had been massive increase of leverage in the entire system, especially in developed markets. That leverage had built in a risk assessment which was almost non-existent.
Mm-hmm.
And the moment the deleveraging happened, basically the whole, Wall Street just melted down. India is a massive recipient of foreign capital. And moment there is any stress in global financial markets, you see massive withdrawal of capital from India, and that causes stress in the Indian financial markets. So I would say 2008 was all about that. That's why it was called the global financial crisis. Mm-hmm. This is a medical crisis, which has been, pretty much, as WHO says, a pandemic, mm-hmm. and which basically has now crossed, all types of barriers, and from, and it's pretty much got to its last mile in most areas where it's now community driven transmission. And that means that every individual on the planet in some way or the other is getting impacted. And that's the reason why I say that this is possibly multifolds worse than what we saw in the 2008 crisis. And therefore we have to prepare and plan for something which is likely to be far more damaging, and the damage will sustain itself far longer than what we saw in the 2008 crisis. In the 2008 crisis, Main Street really did not, right? Most people only saw the stock markets go up and down, and for most people, life went on as normal. There were some job losses, but it was not, again, affecting Main Street to a large extent. People saw a lot of wealth erode, which meant that you could invest less as you got out of the crisis, but it didn't mean that you could consume less. Here, I think you're seeing unprecedented job losses, unprecedented, failures of businesses which are likely to happen. And as Ruchir Sharma, who I, follow, he's with Morgan Stanley Investment Management, he wrote about these zombie companies which are there this time around, companies which have taken a lot of debt. Those are the companies which are likely to go under this time, right? So people who are highly leveraged this time will find it extremely difficult to survive this particular downturn. So you're going to see business mortality going to be much higher than what it was in the 2008 crisis. Now, obviously, what you've seen the Western markets do, what they do in pretty much most crises, print a lot of money and pump that money into the ecosystem. What you've seen certain markets do unprecedentedly is also actually fund people's payroll. So in the UK, they've actually gone and given, I think, something up to £2,500 directly into employees' accounts as a subsistence money for people to basically survive this crisis, right? So I don't think India, unfortunately, is not in that position to do that kind of because India has got a greater risk with its own balance of payments and risk, like I said, premiums increasing, and therefore access to capital reducing overall. So you will not see India go to the same extent, I believe, and therefore you have to be as a business prepared to withstand this downturn for possibly a longer period of time.
And a follow-up question to that is, why aren't asset prices coming down? Why aren't you seeing them reflected then?
Name one asset which has not come down.
Apartments, real estate.
It's like the stress is unbelievable. You please try and buy one apartment. If you really go as a serious buyer, you will get some crazy deals there.
Okay.
So just to give you, again, anecdotally, there are lots of these developers which happen in the Worli Prabhadevi area.
Yeah.
They are currently, I'm told, trading between 20 to 30% below prices 2 years ago. And if you go and talk to people in the secondary markets, they're saying you could get as low as 40% below those prices. So if that's not asset deflation, I don't know what is.
Yeah, it's a good one. Yeah, so there is a property consultant who's also kind of agreeing to what you just said. And yeah, that's kind of gotten a whole reaction now. And so DJ, there's also been a question from one digital marketing company, which is saying that,
So look, if any, I think if you're looking to buy a house, this is possibly the best time because you will, if you're a good credit score, and only if you're buying and to live in. Okay, again, I would kind of, it's a great time to be buying. Okay, because I think the next 3 to 6 months you'll possibly get pricing which you will never ever get again, at least for the foreseeable future, and you will get terms from credit companies because they really want to only lend against borrowers who they see as super safe borrowers. And because interest rates have come down overall, you will see that interest rate transmission happen to better quality borrowers. So you'll be able to borrow at a low cost and you will get the asset at a lower cost. So guys, next 6 months, please go home shopping. Yeah. Try and help the economy also in that process.
and there's a question on affordable housing. What do you think about this segment?
I think that will be a little bit challenged because, most affordable housing depends on people's, and a lot of it was driven by the self-employed category. People who really were doing gigs, either doing their own small business or their own small service. I think it may take them a little bit longer to get comfortable that they will have visibility on their own income in the future for them to come back and then basically look to invest in, owning a house. But having said that, I think it's a fantastic segment to be in because long term Indians, I think if you think about from a savings habit, most Indians will say the first thing they will buy is gold and the second thing they will buy is a house in order to save money. And I don't think that behavior will go away for a long period of time.
Yeah. And DJ, there's one company which has been pinging up.
Yeah, someone just mentioned the new normal is middle class looking at affordable house. I think it'll be the middle class apartments which will be available at affordable housing prices.
Yeah.
So yes, downsizing will happen on that basis.
Yeah, we all wish to see that day soon. And there's a digital marketing company which says that, he's got about 30% more customers now. And never before in his life or their life have they seen cost of acquisition so low. So his question is, or their question is, shouldn't they spend a little more on sales and marketing to get more and get a good market share?
So look, media as an industry has been very hard hit. If you look at media, pretty much every industry which spends has decided to pull one of its main discretionary items, advertising and marketing, correct? So you clearly are seeing a massive impact. Having said that, if you look at the trend over the last few years, digital has been taking a lot of wallet share and market share away from other forms of media. So if you are on the digital side of the business, clearly you are better positioned as compared to people in the print or people in TV or people in other forms. So that clearly is a good place to be. But again, you obviously, like I said, the total universe of spenders who are going to be spending money on marketing of any form, be it media, digital, or any other form, is going to be lower. So you're going to be competing for lesser number of dollars out there, which are likely to be spent.
So DJ, there's next question on custom clearance being a big challenge in India. And this is a time when people are looking to import a lot of goods from China. What's your take on that? How do you see that they can kind of?
It's very tactical and opportunistic, so look here, Indian jugaad at its best here. I wouldn't be the right person to answer.
And again, I think the questions that are repeating is, what are the sectors that you're going to see in the next 6-8 months which are going to thrive? What's your take on that?
So I'm trying to see, there is a COVID-19 heat map which got passed around. It's a Deutsche and Moody's kind of a. Naveen, if I can send that to you, can you put that up and maybe that can be used by people to understand?
Definitely.
So it's an interesting heat map. It just gives you sector-wise what's likely to get hit a lot and what's not.
We'll send that. We'll circulate that.
Yeah, I'll just send it to you.
DJ, any closing comments? What do you say? I think we need a lot
Guys,
of encouragement.
Look, like I said, Indians possibly, as it is, we deal with lot more challenges than most other economies when we are looking to build businesses. So we are, as it is, more resilient. We are, as it is, tougher in the way and it's not like for us, crises are not new. Every day for us to survive and to grow is a crisis. In these times, I think most important is must first be safe and be healthy. As Mr. Modi has said, "Jahan hai to jahan hai." So I think just take care of yourselves. Second is, make sure your employees and make sure that your companies are solvent. Do whatever you can in a humanitarian manner, because everyone is hurting. As you look at your team members, as you look at everyone is hurting. So just make sure you think of things in a human nature as you take decisions. The third was mental health. We all are not used to staying at home and working, and everyone goes through all types of anxiety, WhatsApp, etc., etc. There are lots of different issues which people face, and read, and I think mental health is a big challenge for us. So please communicate with your colleagues, your friends, your team members. Stay in touch all the time. Things will come to an end. This will also, like every other crisis, will come to an end, and we will come out on the right side of this, and we will then rebuild and grow from where we are. So I would say these three things, just it's a better. And the fourth is obviously discover yourself. No better time to find out one good thing about yourself which you want to then polish. One new good thing, right? I'm sure you have lots of good things to say about yourselves, but find out one new good thing about yourself and then focus on that. Take that one away. Take away from this compulsory stay home lockdown process.
Thanks a ton, DJ, and thanks a lot everyone for coming along and asking your questions. There were some very interesting questions that you guys posted, and DJ, we'll get back to you maybe in 2 weeks' time. We're also looking at the situation evolving, so maybe we might be having a very different conversation 2 weeks from now, where we might be more about tactics and how do we now start for the reopening kind of a phase. So I think we'll get back to you and get your advice on that.
I yet think 2 weeks is going to be too early.
Okay.
You will start seeing things happen, but just be prepared for longer.
Okay, got it, DJ.
Take care. Thank you, guys.
Okay.
Bye-bye.
Thanks a lot, everybody. And folks, there are many more, such webinars coming up. Tomorrow we have 2 of them. And we've got many more planned. So do write into us to say what kind of help you require at this time. Happy to kind of do all of that. And yeah, the more you communicate with us, the more better we know on how we can help you guys. And thanks again for being very patient. And I think you guys are one of the far more disciplined people today in terms of asking your questions. I didn't see any stupid self-marketing and self-appreciation on the chat. So thanks again for that. That really helps. So here are our programs which are coming up. Please make a note of that. There are many more which come up quickly because a lot of entrepreneurs and investors really can't give me time, say, way in advance. So I only get a 2-day to 3-day heads up of their availability. So stay tuned. We're going to do many more such programs, and together we shall all come out of this much more stronger, much more happier. And I think if there's one takeaway from DJ today is there's no problem going into a hibernation, cold storage, and coming out stronger. It's always better to come back another day to fight your battles. So thanks everyone. Switching off. See you soon tomorrow. Tomorrow we have 2 sessions going on. So I look forward to seeing you all. Bye-bye.